When you first start investing, it is possible that the idea of building a portfolio worth $1 million would seem like an unreachable ambition. However, accomplishing this goal is not nearly as difficult as it would first appear to be. In point of fact, the United States sees the birth of hundreds of new millionaires every single day. Investing in the companies that pay the highest dividends could be one method for reaching this kind of wealth. In this video, we are going to talk about the dividend stocks that would have made you a millionaire. So before starting this video, please like this video and subscribe to this channel for our future updates. CocaCola. CocaCola is a company that has a long history of giving constant returns to its shareholders. As one of the most recognizable brands in the world, Coca-Cola is also a company that has a long history of providing consistent returns to its shareholders. Coca-Cola has established itself as the industry leader in the beverage business by developing a diverse product line and expanding its operations across the globe. If you had invested $10,000 in Coca-Cola in 1980, the split-adjusted price of a share would have been $21.98. This would have allowed you to purchase around 455 shares of the company's stock. Your initial investment would have resulted in substantial growth over the course of time, and as of right now, it would be worth significantly more than $1 million. Your initial holding of 455 shares would have resulted in nearly 24,000 additional shares after accounting for stock splits. Coca-Cola is well known for its long-standing tradition of paying dividends. At this time, the corporation distributes a dividend that amounts to $1.68 per share on an annual basis. You would receive an approximate annual dividend income of $40,320 if you held 24,000 shares and participated in dividend payments. Because of this, the return on your initial investment will be close to 403%. Procter Gamble. P&G, which stands for Procter Gamble, is a multinational corporation that specializes in consumer goods and maintains a sizable portfolio of well-known brands in a variety of product categories. These categories include health products, personal care items, and cleaning supplies for the home. P&G has a strong reputation in the business world for its ability to provide constant growth while also rewarding its shareholders with dividends. If you had put $10,000 into Procter & Gamble in 1990, you would have been able to buy approximately 210 shares of the company at an average split-adjusted price of $47.62 per share. Your initial investment would have resulted in substantial growth over the course of time, and as of right now, it would be worth significantly more than $1 million. Your initial investment of 210 shares would have resulted in nearly 35 additional shares after accounting for stock splits. The dividend payments that Procter & Gamble make to shareholders are legendary. At this time, the corporation distributes a dividend that amounts to $3.16 per share on an annual basis. You would receive an annual dividend income of approximately $11,060 if you own 3,500 shares of the company. This corresponds to a return on investment of about 110.6% based on your initial investment. Johnson & Johnson. If you had invested the significant amount of $100,000 in Johnson & Johnson in 1979 and accounted for stock splits, the per-share value would have been approximately $71.04. With this substantial investment, you would have been able to acquire about 141 shares of the company's stock. Fast forward to the present day, if you were to cash in your investment, you would be astounded to find yourself with a staggering $1.1 million. Taking into consideration the stock splits that occurred over the years, your original holding of 141 shares would have grown into an impressive 6,700 shares. It is important to note that these calculations do not take into account the significant impact of dividends and reinvested earnings. Johnson & Johnson is renowned for its consistent dividend payments, currently standing at $4.76 per share annually. With your ownership of approximately 6,700 shares, your annual dividend income from Johnson & Johnson stock would amount to a remarkable $32,162. When we analyze the return on your initial investment of $100,000, the annual dividend income of $32,162 represents an extraordinary return of 320%. This highlights the tremendous potential for substantial returns when investing in high-quality dividend stocks like Johnson & Johnson. What truly stands out about this achievement is the fact that it resulted from an initial investment of $100,000, which you diligently held for over 4 decades. It showcases the power of long-term investing and the remarkable growth that can be achieved through patience and wise investment choices. Pepsi. Next on our list is Pepsi. If you had invested $10,000 in Pepsi in 1980, the split-adjusted price of each share would have been $24.66. This would have allowed you to purchase around 405.5 shares of the company at the time. Your investment in Pepsi would have accumulated tremendous growth over the course of the years, and its current worth would be a staggering $1.3 million if you cashed it in today. This expansion is traceable to a number of factors, including the rise of Pepsi's stock price, as well as the effect of stock splits. Taking into account any stock splits that may have occurred, the initial 405 shares you had would have grown to around 7,300 shares. The reliability of Pepsi's dividend payments is one of the reasons why the company is attractive as an investment. At the moment, the annual dividend that Pepsi pays out amounts to $5.06 per share. Taking into account the 7,300 shares that you own, the dividend income that you receive from Pepsi each year would come to approximately $37,000. It is essential to keep in mind that this calculation presupposes that dividends are not reinvestment, which means that you would get the cash dividend payments straight. The yearly dividend income of $37,000, based on your initial investment of $10,000, indicates a yield of around 370%. This is the return on investment that you may expect to get as a result of your investment. This implies that your investment in Pepsi has the potential to bring in a considerable amount of revenue for you. The potential for capital appreciation and dividend income from Pepsi shares over time has the ability to offer investors large profits. If you had invested in a firm with a history of both stability and expansion, such as Pepsi, you would not only have seen the value of your initial investment increase to an amazing level, but you would have also gotten a significant amount of dividend income each year. Pepsi is a good illustration of a dividend stock that has the ability to produce wealth through a mix of capital appreciation and consistent dividend payments. In general, Pepsi is a good example of a dividend stock. Microsoft. Microsoft is the last stock on our list, and it is possible that of the 5 stocks we reviewed, it has the lowest dividend yield. Despite this, it is nevertheless noteworthy because it brings in a substantial amount of revenue over the course of time. If you had put $10,000 into Microsoft in 1994, you would have been able to buy approximately 199 shares at an average split-adjusted price of $50.24 per share. Your initial investment would have grown to more than $1.07 million within a period of time that is far less than 30 years. The rise in the value of Microsoft shares over the course of time is one factor that contributed to this astounding expansion. In addition, taking into account stock splits, your initial investment of 199 shares would have increased to nearly 3,200 shares over the course of time, further contributing to the growth of your investment. In comparison to the other companies, Microsoft's dividend yield is somewhat lower. Yet, the company continues to be a reliable source of income. At the moment, Microsoft provides shareholders with an annual dividend payment of $2.72 per share. You would have an annual dividend income of around $8,662 based on your nearly 3,200 shares if the company paid dividends. This equates to a return on investment of 86% based on your starting capital. Even though Microsoft's dividend yield is smaller than that of Johnson & Johnson, Pepsi, and other dividend companies, the company's capacity to deliver significant income and significant capital appreciation makes it an excellent investment option. The price of Microsoft stock has seen a significant increase over the course of the years, which has contributed to the growth of your investment. What do you think of our video? Let me know in the comment section below. If you enjoyed this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.